Dear students, today we will discuss about the fundamentals of auditing, which includes the definition of audit, the objectives of auditing, and the procedure of auditing. At first, the definition of auditing. The definition of auditing is given by various authors, but the most important is the definition which is given by ICAI, the Institute of Chartered Accountants of India, because ICAI is the premier body of auditing and accounting in India. So the definition given by ICAI carries more importance than the other authors. So we will discuss the definition given by ICAI. The definition is like this. As for ICAI, audit is the systematic, independent examination of financial records, irrespective of legal form, whether profit oriented or not, with the objective to express the expert opinion whether the financial statement gives true or fair view. We will analyze the definition, try to understand the definition by analyzing it. At first, there are some important words in this definition, which is audit is systematic. What is systematic? Systematic means according to auditing and assurance standards. It means when the auditor is doing auditing, he will do the audit according to the auditing and assurance standard issued by ICAI. He cannot do the audit according to his own mind. He have to do audit according to the auditing and assurance standard which is issued by ICAI. Then the word term is independent examination. What is independent examination? Independent examination means auditor should not be associated with the organization in the form of employee. It means an employee of the organization cannot be the auditor, because an employee cannot give his independent opinion about the organization because he is indebted to the organization. That is why the auditor should be independent. It means he should not be the employee of the organization. Then next, financial records. Audit is the systematic, independent examination of financial records. Financial record means auditor will check the financial statement which comprises of the profit and loss account and balance sheet. Then whether profit oriented or not, this phrase means whether profit oriented or not. It means the organization which the auditor is doing auditing, that may or may not have been created with the intention of profit. Then next, with the object to express the expert opinion. Why it is called as expert opinion? It has been called as expert opinion because a chartered accountant, as you know, the qualification of auditor, that he must be a chartered accountant and he must be a member of ICAI. So, being a chartered accountant, he is expert in the field of accounts and auditing. Therefore, he will express his expert opinion. General people, if they will ask that what type of organization is this, how the organization is performing, they will give their general expression. It means what they have understood about the organization. But being the auditor, he will express his expert opinion based upon his auditing. Then next, whether the financial statement gives the true and fair view. The most important point is whether it expresses the true and fair view. What is true and fair view? What is true and fair view has nowhere discussed in the definition or in the book. True and fair view means the financial statement which the auditor has been auditing or is doing audit should be free from material misstatement. What is material misstatement? Material misstatement means the financial statement should not contain mistake or error or fraud by which the auditor will call it as misstatement. What is material misstatement? Differ from person to person, differ from situation to situation. By giving an example, we will discuss it. In an organization of a authorized capital of 10 lakhs, which made a profit of 5 lakhs per year, if there is 1 lakh error in any form in the books of accounts, then it can be called as material misstatement. But in the company which has an authorized capital of 5,000 crores, 1 lakh rupees may or may not matter to the auditor. So material misstatement means important information which should be given in the financial statement but which has escaped through error or fraud. So as a whole, if we analyze the definition of ICI about auditing, this will be like this: that the audit is the systematic, independent examination of financial records irrespective of legal form, whether profit oriented or not, with the objective of express the expert opinion whether the financial statement gives the true and fair view. So now we will go to the objectives of auditing. The objectives of auditing are divided into three parts. One is primary objective, second is secondary objective, the third is specific objective. What is primary objective? Primary objective is whether the financial statement are free from material misstatement or not. It means the first objectives of doing audit by any auditor is to find out whether the books of accounts, that is profit and loss account and balance sheet, are free from material misstatements. It means it is free from error and fraud. Then secondary objective is detection and prevention of error and fraud. Detection, here are two words. One is detection, another is prevention. The auditor's duty is not to detect the error, but the auditor's duty is to give advice to the organization that they should follow, so that in the future those type of error and fraud does not occur in the organization. That is known as preventive measures. So in secondary objective there are two parts, that is detection and prevention of error and fraud. Now we will analyze what is error, what is fraud. Error means the unintentional mistake that is done by any accountant or done by any organization. And what is fraud? Fraud is intentional mistake which is done to deceive others. And now we will analyze the fraud. The fraud are of two types, that is misappropriation of cash, misappropriation of goods, and another type of fraud is fraudulent manipulation of accounts. Three types of fraud. First two types are misappropriation of cash and misappropriation of goods, and the third is fraudulent manipulation of accounts. What is misappropriation of cash? Misappropriation of cash means stealing the cash, hiding the cash, or using the cash for personal benefit. Then what is misappropriation of goods? Misappropriation of goods means using the goods for own benefit. Then what is fraudulent manipulation of accounts? Fraudulent manipulation of accounts means for their own benefit, when the organization either increase or decrease the profit or loss in the financial statement. That is known as fraudulent manipulation of accounts. Then now in short we will discuss about audit procedure. There are two types of procedures followed by the auditor. One is compliance procedure, another is substantive procedure. What is compliance procedure? Compliance procedure means in this procedure the auditor only observes the accounts that has been maintained by the client. So in compliance procedure, risk assessment procedure is followed to know whether internal control of the organization exists, and if that exists, if it really works, then we will know what is internal control. Internal control means the duties of the staffs in the organizations are to be so arranged that the duty of one staff is automatically verified by another staff. That is known as internal control. And the auditor in the compliance procedure is to verify the internal control system. If he finds that the internal control system is okay, then he has the burden of analyzing the financial statement decreases. It means he will perform the substantive procedure in a small scale. Then what is substantive procedure? Substantive procedure means there are two parts of the substantive procedure, that is test of control, test of details. What is test of control? Test of control means what the organization has been performed till today, the auditor will analyze by employing the ratios. It means by seeing the ratios, the auditor will try to analyze what type of control the organization has. It means what till today, what is the performance of the organization. And another is test of details. If the auditor sees that the internal control system of the organization is weak or it is not at all working, then the auditor will analyze the financial statement by employing the test of details. Test of details means most of the transactions of the organizations will be verified from the beginning. It means when the transaction is from the origin of the transaction, how it will be done? It will be done, suppose I am giving an example, there is a sale transaction, the auditor will see the voucher and it will tally the voucher first from the cash book, then from the ledger, then will tally the voucher by seeing the financial statement, and if after passing or after doing the compliance procedure and substantive procedure, still there is any doubt in the mind of the auditor, then the auditor can make third party confirmation. It means he can ask directly to the creditor or to the debtor or the person who is concerned with the organization. So today we have discussed about three things. I will summarize. First, the definition of auditing. What is the definition? Audit is the independent examination of the financial position of the organization, whether profit oriented or not, irrespective of its legal form, to find out whether the financial statements portrays the true and fair view of the organization. Then we have discussed about the objectives of auditing. There are three objectives. First is primary, secondary and specific objective. Primary objective, the auditor has to express his expert opinion, that is a primary objective. Secondary objective, the auditor has to see in secondary objective whether there is any fraud or error in the financial statement, and the detection of error and fraud is the objective of auditing. Then specific objective, we have not discussed the specific objective. Specific objective means that depends upon the specific cases. It means in specific cases, the chartered accountant is given auditing by the government departments. Then in those specific cases, the rules and regulations or the objectives which has been mentioned by the particular department or the particular government agencies which gives the audit to the auditor will be guided by those objectives. So today we have discussed the definition, the objectives and the audit procedure. Audit procedure are of two types. One is compliance and another is substantive. Compliance procedure means only observe the financial statement of the organization, whether it has been maintained in a particular manner or not. And substantive procedure are two types, test of control and test of details. Test of control means it has to, by applying the ratio analysis, the auditor will analyze the financial statement, and test of details means if the auditor feels there are something errors and fraud in spite of the compliance procedure, then the auditor can vouch and verify the transaction from the beginning. And if the auditor is not satisfied, then the third procedure he has to follow, that is third party confirmation. So thank you. I urge for the students that if there is any doubt in their mind, they can ask me in my WhatsApp or through mail or in YouTube, in which I am uploading this video. Thank you for today.